Forex trading is about to take center stage in global financial markets because the Japanese yen is on the cusp of a major technical breakdown in the weekly time horizon. And all of this is being driven by the rise in the price of crude oil, because as the price of crude oil goes up, this means that Japanese companies have to use more yen, they have to increase the supply of yen to buy the same amount of oil and the same dollars, because crude oil is priced in dollars. So we have this major technical breakdown starting to form as early as next week, and we have the catalyst to drive it. And what happens when we start to see this snowballing? We see investors piling on, and they're now dumping Japanese assets, which is just fueling the fire. So it seems like there's no way to stop this major breakdown in the Japanese yen, and this is also going to send the US dollar higher. So for those of you new to the video, my name is John Fortune. I've been trading financial markets for over 18 years, and I'm going to show in today's video not just those major technical breakouts in the dollar and also the Japanese yen in more detail, but I'm going to show you some other major breakouts which are setting up now coming into April. And I'm also going to show you the high probability setups that I'm looking to trade personally in the Forex markets next week. Okay, so let's have a quick look at the US dollar in more detail, because as just discussed, that major bearish catalyst for the yen, which is crude oil going higher, is also a significant bullish catalyst for the dollar. And the US dollar is sitting right at, in the weekly time horizon, we have this kind of triple bottom, and in the monthly, it's a double bottom with a little bit of a test over here. But we're sitting right at the breakout level. Now, why do I think that this is the last chance and the final warning on some of these moves? Because we're coming into a new month. So we're coming into April. What does that mean? Well, when you're breakout trading, or if you are a breakout trader, what you're normally looking for is you're looking to take most of your trades in the first roughly 25% of the candle. Why? Because when one candle closes, it's pretty much used up a lot of the fuel or the ATR for that specific time period. And when a new candle opens, you can have a whole new ATR, whole new move in a given direction. So what we're seeing here is, coming into a new month, we're seeing two major technical setups. One in the US dollar going higher, one in the Japanese yen going lower. Both of them have a major fundamental catalyst. But because we're coming into a new month, as they start to break out, they're not likely to make huge directional moves on Monday and Tuesday. But after Monday and Tuesday, we've got a whole new monthly candle that is set to potentially absolutely rip to the upside. So this is why I think it's the final chance to actually get hold of these patterns or to become aware of them, because I do think that as early as next week, we could start to see some bigger breakouts, because we're going into a brand new monthly candle in these patterns. So needless to say, going into next week, I am bullish overall on the dollar. I do think it probably needs to pull back a little bit first, but I'm primarily looking to buy the dip in the US dollar pairs, as you're going to see as we go through today's video. Okay, so let's have a look at the portfolio selection, looking at the strongest and weakest currencies heading into next week, so we can pick the best pairs. And then next, we're going to go on one by one through the US dollar pairs. And remember, guys, if you find these videos valuable or you find them helpful in any way at all, be sure to like, share, and especially subscribe. It really helps the channel when you do that. And I really do appreciate every single one of you who has done that so far, and all of you who have subscribed to the channel, because you are really helping the channel by doing that. So thank you. So looking at the portfolio selection, there's just some very important key points we need to look at here. The Japanese yen is the #1 short idea going into next week. The US dollar is the #1 long idea, as we've just discussed. Now, alongside that, the Swiss franc is another currency I'm looking to be short. The Swiss franc was doing really well. SMB came out and said they're prepared to intervene, and all appetite for buying the Swiss franc just declined. And now it's basically pretty much one of the best shorts going into next week, at least for the time being. And to the short side, I also like the New Zealand dollar, which has been underperforming as well. Now, last week we saw something very interesting. Notice this. The Canadian dollar and the Australian dollar are both oversold on a rolling daily basis, and they're actually setting up for a bounce into Monday and Tuesday. And this is actually something we really need to pay attention to, because in inflationary regimes, when inflation's going up, commodity currencies do well and EU currencies suffer. We've been trading that regime pretty much all the way through Q1. We've only had up till now about one losing week this quarter, and that was about 0.39, so it was a very small losing week, and that was all trading inflation regimes. So when these regimes start to materialize, they can roll on and roll on, roll on for quite a long period of time. But what we saw last week was the pound and the euro starting to rise to the top of the scoreboards in the quantitative data here. So what does that tell us? Well, when the pound and the euro start to outperform the CAD and the Aussie, that's risk off. That tells us we're starting to actually see some fear coming into the markets because of what's happening in stocks. So going into next week, you know, on balance, I still would be looking maybe CAD long, Aussie long versus some of the weaker currencies like Aussie yen to the upside, CAD yen to the upside, CAD franc to the upside. But preferably just for next week, because of the quantitative data, I'm going to be looking at the pound to the upside versus the New Zealand, the yen and the franc. And also I'm interested in the euro, not versus the dollar, but versus the franc, the Japanese yen, and also the New Zealand to the upside. Okay, so let's start by looking at euro dollar, and then we're going to go through the dollar pairs one by one. And I really always like to start with the buy and sell zones because it just strips everything back from these charts. And the buy and sell zones, which is where we have roughly 68-70% chance of reverting back inside this range once we trade into it, because of the volatility. Basically, price just becomes stretched like an elastic band. This is really the starting point of everything I'm looking at, and then I'm adding in the multi-charts and the other analysis on top of it. So going into next week, you can see any kind of push into this area, into the sell zone, which is above the 1.16364. This is the key area of resistance I would be looking for a potential short. We've just discussed that, you know, overall, I'm kind of looking to be long the euro and the dollar. But when it comes to euro dollar, I'm looking for a potential short. And I'm going to show you in a second on the multi-charts why we are also setting up a major technical breakdown in euro dollar going into next week. So just in terms of what I'm looking at for a short-term trade, this would obviously be a range reversal play. For those of you who are wondering what a range reversal play is, I cover all of the core setups that we use in the free strategy guide below in the pinned comment and the description. And a range reversal play is simply where we trade back above the moving average. So we're trending to the downside. You know, the moving average is doing this essentially, and then it breaks back above the moving average. And what happens is the moving average goes flat and price just starts to do this. And then at some point, what will happen is price tends to consolidate, and that's when you just kind of step back. And if you're a breakout trader, you know, you don't try and breakout trade a range like this because it's loose. If you're breakout trading, you know, you break out something which is tight like this. So as we push up into this area, this would become a range reversal play, and it's in the direction. I'm looking to be short in the direction of the overall move and the catalyst, the fundamental driver in the markets at the moment, which is crude oil. So that's what I'm specifically looking at next week in terms of a 1 or 2 day short opportunity. Now, if we jump over to the multi-charts, this is where we have a major problem in euro dollar, because this right here, and in fact, I'm just going to take these levels off, so it just cleans it up a little bit. We'll keep these in the daily. But this right here, this is a major, major bearish pattern. You see this 1, 2, 3 bar pattern where you've got this momentum to the downside and then it pauses. Guys, if we break this low here at the 1.1411, this sets up a significant, which is this low here, by the way, this is this pattern low. This sets up a potential significant liquidation to the downside. So if you want to get in early, because if this is the major breakout level here, sometimes it can hit this and start to chop around. So if you look at last week's low, this is actually the key support, basically propping up this kind of pennant or symmetrical triangle pattern. So a breakdown below last week's low, this kind of pin candle, the 1.14846, and not every break of a weekly low is necessarily a liquidation point or a point at which a new trend can form. But this one is. This is specifically where you can get a significant liquidation to the downside. So keep an eye on the 1.14846. And remember, guys, the last time I showed you a breakout in this was over here. It was this pattern here. And we broke out, went straight to the target. We've achieved that. And now from that target, we are actually going into a new kind of symmetrical triangle. So there's two things I'd keep an eye out for next week. You can see we have closed down below the 50 EMA. And in the monthly, we're set to close below the 9 EMA. And that opens up the 20 EMA down here. You can use the 10 EMA, but the 9 one is a little bit more sensitive. But it doesn't really matter if you use 10 or 9. But in this scenario, if we can break down, so there's two things I'd look for next week. One, if we push back into the top of the pattern, it's an if-then process. I'm being reactive. I'm not trying to be predictive. I'm not going to tell you exactly where the market is going pip for pip next week because I don't know. But what I do know is if we push up into this area, the 1.1636, then I'm going to be looking for a potential short because you can see the sell zone here in the daily time horizon. The reason I like a short above here is because we have daily resistance, one here and one here. Now, the reason I've circled 2, or the reason I've got 2 of them on here, is because if it pushes up straight away, you can see that this level here aligns with the daily 50-period moving average. So that would become the better short. But if this chops around for a day or two, you may find the daily moving average actually makes its way down to this high over here. And if that's the case, by the time we push into this, this would be the high with the 50-period moving average in the daily that I'd be looking for a 1 or 2 day short from. And bear in mind, if we push up into this area, then we're not likely to come down and take out this low. We're either going to do one or the other. It's unlikely we're going to do both. So that's what I'm looking at. If we push higher, I'm still looking for a short. And if we break down below the 1.14846, then we probably won't be coming back and testing this area because this is a significant breakout point. And I do think this market is at risk, or I know that this market is at least at risk of a liquidation below the 1.1484, and certainly this low down here, which is the bottom of the prior 2 weekly candles here. Next is pound dollar. Now, based on the fact we've got this overriding oil catalyst, I only want to be looking to the short side in pound dollar. I really like these 2 prior highs in the sell zone. I was looking for this type of setup last week, and pound dollar didn't really go anywhere, so I just didn't trade it. But this week, if we can push up, so again, if then process and we trade into the 1.3470, this is going to be a really nice area of resistance in the sell zone next week, looking for a 1 or 2 day reversal back towards the moving average. And if we pull up the multi-charts, you can see here this note on the monthly time horizon had the same note on the euro-dollar pair. Attempt to trend. This was an attempt to trend. We had a bull flag. We attempted to trend above the high and we failed. So this is now most likely at least coming down to here. And when it breaks here, this actually turns into a double top. So all of this is pointing to a major breakout in the US dollar to the upside. And of course, we've been through why we've got that fundamental catalyst to drive that. So going into next week, the key area for a breakdown, if we do not take out the upper bound and I get to kind of sell the rip, the breakdown level would be the 1.32180, which again, we have this kind of multi-candle pattern setting up in the weekly, and you could see a really significant sell-off down below the 1.3218. So the weekly low here, which is kind of at the bottom of this trend line, below there is where you could look for that early entry, but the actual breakout level is the 1.32183 in pound dollar. Next is US dollar Japanese yen. Now, I only want to be a buyer of this market. I do not want to sell this market under any circumstances. This is the currency pair which is most likely to benefit to the upside from this rise in crude oil. So I do not want to be caught on the wrong side of this. The buy zone next week starts at the 15800 area. If we do get a dip down into here, I would buy below this low here. However, there is a good chance we just break out to the upside next week. So let's have a look at the multi-charts then. You can see here, let me just zoom out on the monthly. I mean, this is what we're dealing here with, guys. On the monthly time horizon, we've consolidated since May of 24, and we're now approaching the major breakout level right at the high of this pattern. We've had a breakout of the consolidation, a retest in the weekly, and now we're breaking the prior high. So in the US dollar Japanese yen pair, we've already got the major breakout. It's just in the yen itself, we're just on the precipice of the breakdown and the technical break to the downside. But in US dollar yen, it's already happened. We've already broken out of the significant high. So this is a market that, you know, really the breakout level here is the 159. You could say 1600, you know, above the 1600, this thing is kind of on the go. So I would anticipate this, you know, just continue to break out. You can see here, we had a strong up day. We've closed above the consolidation here. The only thing I would say is, you know, for the next couple of days, maybe it pulls back or it just kind of does a little bit of a move. But coming into the new month, when we get a new monthly candle, look at how this is going to close. This mini bull flag here, and then we have this first up candle in the monthly. This is going to set up a big potential run through the highs. So only want to be a buyer of this at the very least. I do not want to short this under any circumstances next week. And so if we pull up the Japanese yen here on the multi-charts, you can see this is a big monthly pattern. I mean, we're talking about, you know, 16% downside with the breakout of this monthly pattern. And if we zoom in, you can see not only have we broken out of the monthly pattern, but we formed this kind of rectangle pattern where we held the low, held the high. This is where it looked like it was going to break out on the election, and then we had the kind of failed breakout, and now we're setting up to break the low in the other direction. So the Weekly target is actually to the downside at the 0.0061 if you're looking at the yen futures. But this is nothing. If you look on the left hand side here, this is nothing where my mouse is compared to the monthly pattern, which is just broken. So this really does suggest that the yen is in major trouble. And if you can capitalize on that, and be short the yen, then obviously that's great. But the primary thing as a trader is to manage your risk. So I would not be buying this under any circumstances. If the BOJ intervenes and it pops higher, so be it. But I absolutely would not want to be buying the Japanese yen at this point. And so finally, the key level to watch here is the 0.0062, which is the low over here. Because not every breakout is a potential liquidation point, but that is a potential liquidation point. And below that level, especially as we've already pulled back, tested, pulled back, and now we're looking to break again, that's where things can really start to pick up momentum to the downside. Next is US dollar CAD. Now, US dollar CAD last week was a 5-star setup. This was a great setup. I actually shorted it and it didn't work. So there's information in that. That tells me, and you can see over here, we're now overbought on a rolling daily basis. That tells me we started to see abnormal momentum, because usually in a kind of ranging market, or if the US dollar and the CAD are kind of equally matched, we trade into the upper bound and then we sell off. The fact we held through the upper bound last week, and now we're starting to see overbought readings on a rolling daily basis, that means we're starting to see momentum to the upside. It's a bull flag. So I do anticipate this going higher. I would like to see this, and this actually is what we call a Monday, Tuesday reversal play. So this is also in the free strategy guide in the description, pin comment below for you. But a Monday, Tuesday reversal play is where we get a market driving up into its upper bound in 1 week. It should reverse that week most of the time. If it doesn't, it tends to reverse on the following Monday or Tuesday. Sometimes it's a Wednesday. But that tends to be what happens in terms of price action. So I do anticipate, and think of this now with the monthly candle. We come in, we have a strong up move. We then start a new month and we pull back for a few days. What that's going to do is that's going to paint the lower wick. We open here, right? It paints the lower wick in the first few days. And then you get that big monthly candle to the upside. So I anticipate this pulling back a little bit. If we pull down below the 1.3787, this is going to be a dip and flip setup. So we dip into the buy zone and we trade into the moving average, which is now pulling away and it's showing momentum to the upside. So that's what I'm looking for in US dollar CAD. The buy zone starts at the 1.37875. And just quickly for context, last week, this is where we traded into the sell zone. And this was where I actually shorted it right here. I shorted it right here, and then we had this push up. So going into next week, I do think this is probably going to pull back and chop around in this area. Maybe it actually comes all the way back down, but it'd have to come back through this pattern. So it's hard to know if it's going to do that. It could do that, it could also test the 50 here. But either way, this is something now we have to be looking at, a potential consolidation for a couple of days. And then going into a new month, the likelihood is, which of course starts next week, so I'm telling you this now, the likelihood is we start to see this continuation to the upside. So overall now, I would be looking to the long side in US dollar CAD, but it just goes to show 5-star setups don't necessarily guarantee a 5-star outcome, but that is when you've got a horizontal area of resistance, a descending channel, and you're trading into dynamic resistance, and you've got portfolio selection, all of that actually points to a 5-star setup. So didn't work last week, and now that information tells me to start to look to the upside coming into April. Okay, so moving on to US dollar Swiss franc. So US dollar Swiss franc has a really nice key area of support in the buy zone. The buy zone starts at the 0.78806. We looked at this in portfolio selection. On balance, I would prefer to be buying dips. However, and that would be for a 1 or 2 day bounce in US dollar Swiss franc. However, if we go over to the multi-charts here, you can see the slight issue is that this is not as good a setup to the upside as some of the others, because it's still kind of counter the overall trend. So we've had a really strong Swiss franc, and we only just had the SNB come out and say that they're going to intervene if it gets too strong. So we're kind of in a downtrend, but we've just started to potentially reverse it. We haven't even yet closed above the 9 EMA. So we'll see if we finish the month next week above the 9 EMA. If we do, that's going to open up the 20 period EMA at the 0.2456. But overall, I mean, you can see we're kind of trending down. We had a touch of the trend line, horizontal support here, which turned into resistance, or it didn't turn into resistance, but it kind of intersected here. And so just like US dollar CAD, we're kind of pushing through it. And this tells me we're probably looking at a bigger breakout here. You know, this isn't the best chart, even though portfolio selection is US dollar long, Swiss franc short. It probably will close above the 9 and push to the 0.2456. But beyond that, there isn't too much here technically to look at. If we do end up down below the buy zone, we will be going into this kind of trend low. So, you know, there is probably something down here, but not a great chart. I think there are better opportunities next week. Next is New Zealand dollar. Now, contrary to US dollar franc, this actually is quite a nice chart because we're trending down very nicely. And you can see every time we pull back into the moving average, we sell off. So we have a really nice rip and flip setup materializing here potentially because the moving average is intersecting the sell zone. And it's also the low right here, which we've broken through. So any pullback into this area and a retest of the low and the moving average in the sell zone, which starts at the 0.5838, I am going to be looking for another push away from the, so rip higher and then flip from the moving average down in New Zealand dollar. I'm going to be looking for a 1 or 2 day reversal from this area. But if we jump over to the multi-charts, we also have a really nice technical setup to the downside because you can see we're inside this big kind of monthly pennant or symmetrical triangle, which is forming because now we've got 1, 2, 3, 4 points. And any kind of pullback to here, because this is the breakout level in the 4 hours, and you can see last month's low, this kind of inside candle. If we get a pullback into this area, so we don't breach the upper bound, we just start to break down and continue to trend lower because look at this weekly candle. Very, very bearish. Can we come all the way back up and test the sell zone? It's definitely possible. It's definitely possible. But there is also a chance in this market, I think, that this just pulls back for 1 or 2 days into the 20 period moving average, and then you start to get that sell off. And look at where the buy zone or the profit taking zone sits next week, the 0.56519. So any pullback for 1 day, you know, into the 9 period moving average, you could look for that continuation down right into this area. This would be a great place to book profits next week on any New Zealand dollar shorts. But preferably, I would like to see it enter the sell zone in order for me to really get involved in New Zealand dollar. And the final dollar pair before we move on to Bitcoin and Ethereum, where we are also looking at major breakdowns. But the final pair is Aussie dollar. And then after Bitcoin and Ethereum, we will look at some of the non-US dollar pairs that are setting up really nicely for next week. But in Aussie dollar, notice how we've started to roll over. We are overbought on a rolling monthly basis, and now we're topping out, and now we're starting to roll back. So we need to pause and correct lower for at least a month. And this fits in with everything we've looked at in the US dollar as well. We're oversold on a rolling daily basis, which means we probably need to push higher or pause or correct for 1 or 2 days. And in this case, this would pull us back for a nice rip and flip setup. So again, as momentum starts to come in, we pull away from the moving average. You can see we start to range around the moving average. And then suddenly we get momentum and we start to trend. So that's where we go from range reversal trading into a kind of, in this case, a rip higher and a flip from the moving average. So above the 0.699190 is where I'd be looking for a potential short for 1 or 2 days. And again, if you're wondering how I set profit targets and how you can do that, you can also find all of that in the strategy guide below. Now, just quickly, if I pull up Aussie dollar on the multi-charts, we closed the week below the 9 EMA. Now we're going down to the 20 EMA. And what I'd like to see is this pull back into the sell zone, because look at this last month. Engulfing candle. These are just the candles that you're seeing right here, but on the, in this case, the daily time horizon. So engulfing monthly candle, I would like to see a new month open, a pullback, painting the wick of the new month. And as we do that, and we trade into the 0.69919 reactively, if that's what we get, what I really like here is we can actually use last week's low, which sits right at the sell zone, and we've got the dynamic support of the 50 period moving average in the 4-hour time frame. So nice setup to the downside. If we get this rip higher into the sell zone, I'm going to be looking for that flip lower for 1 or 2 days. Next is Bitcoin. Now we are set for another big move down in Bitcoin, and the last time I told you this was over here. And you can see right here, I was warning that we're set for a big decline, and we had 1, 2, 3 big weeks down. Then we went into a consolidation, but look what's happening here. Inside monthly candle, big expansion for 2 months. Inside monthly candle yet again. So when is the breakout likely to come? It can come as early as next week, but you probably need to let the month finish because it's going to finish as an inside month. So not expecting any major breakouts, you know, before this month ends. But once this month ends, you can see you can actually take the monthly candle low from last month, and that would be your breakout level, because when you're trending, you've got expansion of volatility, contraction, and a break of that contraction or range low of the inside candle. That's where you can really start to get, you can notice over here. Now, if you were proficient, you could have gone a little bit earlier. I actually highlighted it for you over here, but you can see as soon as we broke that, we got the liquidation to the downside. So let Bitcoin finish its month and start to look for a break down below the monthly low. And that is where I think we're likely to see a significant liquidation to the downside in Bitcoin and also Ethereum, as we're about to see. Next is Ethereum. So you can see we've got this channel again, but when is this likely to break? Where is the breakout level? The best idea would be to wait for the monthly candle to close. Remember what I said about breakout trading at the beginning of the video? Trading in the first kind of 25% of the candle most of the time is actually going to yield the best results. So let the monthly candle finish, and then over the next week or so, that's when you're going to get the opportunity to potentially trade this to the downside. The breakout level, in this case, the monthly candle low, also sits at the channel low. So that is your breakout level right there around the 1907. You could say a breakdown below 1900 is probably where we're going to start to see Ethereum liquidating to the downside. But I would wait until we get April and a new monthly candle. Okay, so let's look at some of the pound and euro pairs that are like outside the dollar pairs going into next week. Pound yen, so based on the portfolio selection we were looking at, I do really like this as a potential buy the dip below the 209.20. If we break down below the moving average, so again, if we do this, then I'm going to do this. I'm being reactive. I'm not trying to predict the market. If the market pushes down into this area, the buy zone starts at the 209.88. We have a really nice key area of support, and this is where I'd be looking to buy the dip for a 1 or 2 day move back towards the moving average. So it's a range play, it's a range reversal play. Now, pound yen also has a potential liquidation point next week, and it's actually the same setup in pound yen that we just looked at in Bitcoin, Ethereum, but in the other direction. So a quick look on the multi-charts. You can see we've had this kind of contraction, but look at this, 1 month, 2 month, and we are set for an inside month. So again, if you are looking for the breakout in the pound yen pair, it's above the 213.30, and I would wait for this month to finish, and as we start a new month, look for an expansion out of this contraction month in pound yen. Next is pound New Zealand. I can only buy this market or do nothing next week. I cannot sell this market under any circumstances. And this is a dip and flip setup. So we're pulling away from the moving average. We're no longer ranging. And as we pick up momentum, we're looking for this pullback into the buy zone first and foremost at the 2.28539. And a push into the moving average and a flip back higher for at least 1 or 2 days, but it could also be a swing trade to new highs. But I'm going to be looking to book profits after 1 or 2 days. So that's what I'm looking at next week in pound New Zealand. And there's a really nice key area of potential support here as well if we look at the multi-charts. And that's right here, because if you look, you can see the buy zone sits right at last month's high, which is right here. So any kind of pullback into this area, we've got the daily 50 period moving average. We also have the daily 20 period moving average, and we also have this month's high right here. So that's the opportunity I'd be looking for a 1 or 2 day bounce. I can only buy this market or do nothing next week. Next is euro yen. Like pound yen, I can either buy the dip or I can take the breakout trade, but I can only buy it or do nothing. I cannot sell this market. So the dip would begin below the 182.36. This is where we enter the buy zone, and we've got really nice daily support levels right here. So that's where I'd be looking to buy the dip. It would actually turn into a bit of a range. But just like pound yen, we also have a breakout level. And you can see here that we also have this nice uptrend. If we do push into the buy zone next week, you know, we'd be crisscrossing this moving average. So I'm kind of buying into this, looking for a high low on the dip. But we also have an inside month developing here, just like in pound yen and Bitcoin, Ethereum. So just be aware that if this pushes higher on Monday or Tuesday, because we're not quite into April yet, then you would have to move this breakout level higher, because that would become the new high for the inside month. But the inside month is the breakout area, or the high of that is the breakout level you want to look for next week, which currently is the 184.684. If we push higher for 1 or 2 days, you'll have to take that as the new high once the April candle opens next week. Next is Euro New Zealand. I can only be a buyer or do nothing. Really nice potential buy the dip opportunity. This would also be a dip and flip into the moving average, which is now intersecting the buy zone. And it's the top of this range where we get this kind of stair step down into the 1.98136. So I really like this for a potential buy the dip opportunity next week. You can see on the multi-charts, we are setting up a really nice monthly candle. I anticipate this will close pretty much where it is. And then we're probably going to get a little pullback towards last month's high. And this is where the buy zone starts. We're also at the daily moving average. So this is just setting up a really nice opportunity. I'm going to look for 1 or 2 days up if we can get there reactively. But in terms of a swing trade, you could probably swing trade that because this breakout target for this pattern sits at the 2.0212. So any kind of pullback and buy the dip, I'm going to be looking for 1 or 2 days as per my mandate and my process. But this could very easily turn into a swing trade over the next few weeks to the 2.0218, which is this pattern's target here. Okay, so let's have a look at crude oil before wrapping up the video with gold and silver. Now, crude oil is obviously, for me, a long or do nothing. I cannot short this under any circumstances. Why in the world anybody would want to try and time a short in crude oil? You know, with the best will in the world, this might go down from 100 to 90, $10. Why would you risk, multiple upside to try and make $10 to the downside? It makes no sense to me. So I can only buy this market. Last week, we traded into the buy zone. And look at where we traded into last week, the 20-period moving average. This was a dip and a flip setup. We looked at this in last week's video. So really nice bounce from the buy zone last week. If we can pull back, and because we tested the buy zone last week, I'm suspecting a breakout this week. We tend to do this. We pull back, bounce, hold, and then next week we break up. Then pull back, bounce, hold, then next week we break out. So I'm anticipating a break to the upside. But if unexpectedly or for whatever reason we end up taking out the prior low, this would once again set up the opportunity for a bounce higher for 1 or 2 days. So the buy zone this week is at the 86.66. If we trade into it and this key area of support, I'm going to be looking for potentially a 1 or 2 day opportunity to the upside in crude oil. And the breakout level here is probably a familiar pattern now coming into the end of this month, because we had a very, very tight month in many of these pairs. But in this case, we had a very, very tight week. So we've had this fake out to the downside. Look at how we had this inside month. We had traders attempting to break out the same trade that I've been showing you to the upside on a monthly basis, which is setting up. Traders tried to trade that to the downside and failed. Came back, reclaimed this range candle, this kind of consolidation candle. And now look at the wick. Look at the buying off of the 9 EMA. And now we're setting up for a break through the high of last week, the 102.15. So I suspect we're going to break out because this was from the buy zone. This was the buy the dip in the buy zone. Above the 102.153, this is going to open up a run to the prior high, and you could say around the 120 area. And the next key area of resistance is just above it on a monthly basis, the 124. So I think we're going to trade above the 102.15 next week. And I think that's going to set up a run towards 120 to 125 in crude oil, most likely going to drag the US dollar higher because it's going to put downward pressure on the Japanese yen. Okay, so wrapping up the video with gold and silver. Now, in gold and silver, I have a bearish bias on both of them because when the dollar goes up, this is a headwind for gold and silver. It's harder for them to go up as the dollar's going up. Gold can actually go up with the dollar. It still struggles when the dollar's strong, but it can go up with the dollar. Silver tends to underperform pretty much all the time when the dollar's going up, most of the time. So I do have a bearish bias overall on both of them because of my bullish bias in the dollar. But notice where we are. We're above the 9 EMA in the monthly, and we are below the 9 and 20 EMA in the weekly. So we've got kind of downward pressure in the weekly and a bit of upward pressure from the moving average in the monthly. So what I would like to see is, I would like to see it break out of this counter trend move. It's kind of now consolidating between the 50 EMA and this trend line. And we have the significant support level, which is this inside month. So remember, we've been looking at these all the way through the video. The inside month low, if we can break back down below the 4402, this is when you can start to look for those moves. So you don't necessarily take the break, you let it break, and then you look for the moves into the moving average in a way. So looking for shorts down to the prior low is what I'd be looking for in gold next week. And I do think because we've closed down below the 20 EMA, we are most likely going to be making our way down to the 4077. So you can use that weekly 50 EMA as a target here as well. And last but not least, we have silver. Very similar setup, trending to the downside here, but overall we're at the 9 EMA. So these markets aren't fantastic here. It would be much better if the month closes below the 9 EMA, because then that's going to open up a move to the 20 EMA. So for now, you know, on balance, I would look for the breakdown again. You know, just like over here, you break down and then you pull back into the moving average and move away. Into the moving average and move away. And very often you get 2, sometimes 3, but those 2 of those pullbacks. So that's why I'd be looking for a pullback. And in this case, a move down to the next support level at the 64,017. So I don't think gold and silver are fantastic because I have a bearish bias on them, but they're holding their 9 monthly EMA. So those are 2 kind of opposing forces. So I would actually be a bit patient on gold and silver and just wait for better setups. So that is it from me for today, guys. As always, I hope you enjoyed today's video. And if you did, why not consider joining us in the GMT training room each day, where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.